Time for another video market update. And today we're going to talk about what we've been talking about consistently, which is volatility in the market. Volatility is when there's a sudden rise or more commonly a fall in the price of a stock or in the stock market in sometimes what feels like unpredictable reasons. Now, a large investment bank and their strategy team has identified what they determine to be a near bulletproof indicator that the market is ready to strengthen, not weaken. So there's a buy signal which is triggered when the VIX, which is the volatility index, rises by more than 50% of its 1 month moving average, which happened on January 25th. Now, this is another technical analysis that is used. And a buy signal is an event where conditions are set where traders or investors, there's an alert for them to enter a purchase on a specific investment. So that's kind of the buy signal. So this strategy and this bulletproof indication is that once the VIX has risen for more than 50% from its 1 month moving average, that 100% of the time the market has risen except for years in which we've had a recession. So this feature or this metric that they've been using has been correct every single time but one. That one time was 2008 when we fell into a near Great Depression or the Great Recession. So the question is, if this indicator is 100% correct that the market will rise outside of a recession, the big question should be, what's the likelihood of recession? So economists track recessions based on the business cycle. Most people look at a recession as 2 quarters of negative GDP growth. So we have to look and say, well, how likely is it that our country is going to fall into recession? And so there's a couple of thoughts. Economists were surveyed and about 8% predicted that there would be a recession in 2022. The former head of the Federal Reserve Bank of Atlanta believes that the chance of recession is very, quote, low in 2022, and even into 2023, the thought is the recession likelihood is fairly small. And why is that? Because we've been able to survive through this inflation. If we can get inflation to come down, we can get everybody to get back to the workforce, right, with COVID kind of seemingly waning, that if those things can continue to go in positive directions, the likelihood of recession is very low. And if the likelihood of recession is very low, this technical analysis based on the trigger or based on this buy signal says the stock market should strengthen in 2022 and not weaken. Like with all technical analysis, it's one data point, but what we're looking for is, can we get a little bit more stability in the world? Can we get a little bit more resolution on what's going on with interest rates and inflation? And if we do, we should still look for strength in the market, even though it may come with a little bit of volatility. So if you have any questions on that, let me know. I'd love to hear from you. Leave a comment if there's something that you have a question on. Give us a like. Go ahead and subscribe if you haven't. But if not, I hope you make it a great week.